Hello and welcome to Commodity Champions. I'm Manisha Gupta, and 2020, the first half of this year, has been the gold's time to shine. We've seen the gold prices give you double-digit returns until now in this year, outpacing equities and other safe haven assets during these uncertain recessionary times. As we speak, the gold prices are up 15% in dollar terms, and we have hit all-time highs in rupee, in euro and Australian dollar and many other currencies as well. The low to negative global real yields and gold's low correlation to other assets add to the positive catalyst in the current environment. This year's backdrop of the potential for a pandemic-induced global recession comes as the US and China trade war restarts. There is a deglobalization of supply chains, creating a less inclusive global economy. Uncertainty in the near term seems to be the only certainty in 2020. This year is also different from a demand perspective as it relates to gold. According to the World Gold Council, the first quarter 2020, the jewelry demand was the lowest in a decade, while the first quarter investment demand was the highest since 2016. So it clearly has been an year of records when it comes to the gold prices in sense of demand, in sense of prices and the interest that it has generated across the world. Joining me now to take this discussion forward is Shekhar Bhandari. He is President and Business Head of Global Transaction Banking and Precious Metals at Kotak Mahindra Bank. I also have with me Chirag Sheth, who is a consultant at Metal Focus. And we have the Pure Gold companies George Saul and Anmol Jewelers founder Ishu Datwani will join us on the show as well. Thank you, gentlemen, for your time. And Shekhar, I want to start with you first. A lot of interest in gold, as we have seen. The investment demand seems to be really picking up. But what is the trend that you see as the lockdown is easing, especially when it comes to physical buying?
Manisha, on the back of a safe haven buying and a weak global outlook, you'll generally find that this trend will continue as we even post-COVID. A negative outlook from Fed, we saw it yesterday till 2022. They are going to continue. And the entire QE, which now gets into the system, you will see rising debt, rising asset prices, which will weaken the exchange rate. To sum it all, you will generally find gold much dearer from here. It still remains a good investment in terms of dollar terms as well as rupee terms. And the safe haven buying looks like continuing till at least next 12 months.
Shekhar, I mean, I hear that a lot. I don't know about you, but a lot of people still don't see gold as a financial asset class. I mean, for them, it's perhaps jewelry or a gifting opportunity. But as an investment, when you talk about financializations, a lot of Indians still do not see it like that. When it comes to it being a part of your portfolio, with the changing times, have you seen that happen as well?
I generally say that the 50% of India, I call the better half, has been one of the best investors in such times, as well as over the last 30 to 40 years. The asset base they have been holding for either social security or investment or jewelry has given the best returns to them, and they continue to hold it. If I were to correlate the ETF demand, which is coming right now, or a demand for sovereign gold bonds, it will defy what we generally think right now. People like gold, people want to invest in gold, and currently people foresee good amount of returns coming from gold. I've seen many wealth customers actually moving, expanding their entire asset classes and moving into the gold portfolio. And gold seems to be dearer as well as being liked right now. But I agree with you. I think sometime back it was not thought so. But COVID-19 and what is happening on the trade war side actually brings in much more what a safe haven status of gold is.
Absolutely. Chirag, I want to get you into the conversation as well. And the US Fed meeting in this week clearly has been yet another supportive factor, even as we seem to be closing yet another week on a weaker note for other asset classes. But the gold prices are trading quite positive. What are the trends that you are seeing right now as the lockdown eases, not just in India, but various other countries as well? What have been the initial trends that you're noting?
I think the fundamentals surely are positive for gold in that sense, be it your quantitative easing or whatever the Fed has come out with, they are looking at 9.5% unemployment, 6.5% drop in GDP growth. So these are some very, very serious numbers to look at. And the fact that for next, 2 to 3 years, the central banks are likely to maintain loose monetary policy. All this thing obviously is positive gold. However, what you are seeing is that while the sentiment is becoming positive, the demand obviously is fairly weak. While most of the countries are now opening the lockdown, the kind of numbers that we are getting speaking with people is, probably the business is just 10 to 20% of what it was. So, at this moment, I think, and that's why gold is lacking a bit of momentum, that is something which we are not seeing. I think probably once we see an opening of lockdown and demand also start picking up, you will see the, conducive, positive fundamentals also then translating into higher prices.
Fair point. That Shekhar, what would you say to that? That yes, when you talk to jewelers, they do tell you that the business is not far from normal right now, but investment demand, the financialization of it, jewelry, if you look at the global trends, 50% of the demand still comes from jewelry, then it is investment, and then we see ETFs, etc., and then technology is a very small market share there. But do you see this changing anytime soon? Do you see investment coming to a number one, or that is still very, very far away?
I still will feel the jewelry is commanded by 2 or 3 behaviors, which generally are across the world, and especially in India. Marriages still have a significant portion of jewelry inbuilt into it. The birth of a child still has a good amount of jewelry inbuilt into it. And you do see that as a culture, Indians would want to have some proportion of gold. You call it jewelry, you call it savings or investment. They have a combination of both. However, if I were to look at the current trend, COVID-19, the marriages are going to get delayed. You will find a few, all the discretionary purchases getting affected significantly. Consumer income actually gets affected, and impulse-led purchases, touch and feel requirement, low footfalls. I think all these will result into the entire discretionary part, which was a significant part of jewelry getting affected. It gets compensated some part with the ETF and the sovereign gold bond demand. However, that won't be sufficient enough to compensate for whatever the jewelry is losing. But okay. I think I would like to watch it for a couple of more months before you can make a conclusion that I think how we are proceeding.
Oh, well, yes. To call it a trend is still too early now. Also joining us on the conversation is George Saul from the Pure Gold Company. And I really had to convince George that it would be a lot of interest to the Indians, given the kind of numbers that the Pure Gold Company has put out in sense of demand in the previous, on a week-to-week basis, George. A near 1,000% of increase in sense of gold buying from professionals, in sense of investment. I mean, that is a number to look at and a lot to take away from as well. What do you give that to? Is it about the COVID-19? Is it about the global recessionary fears that the markets are looking at? Has that led to more and more people coming out and buying gold?
Hi, thanks for having me on the show. There was a lot of demand even before the onset of coronavirus. People were concerned about geopolitical concern, Brexit uncertainty, the possibility of a recession even without coronavirus or COVID-19. And, during the onset of it, obviously demand for physical gold spiked considerably. We had a lot of emotional impulse buyers, a lot of panic-stricken investors, and people were understandably very, very concerned about, their wealth, their finance, their asset classes, and as such, we've been very, very busy. Over the last couple of weeks in particular, we've seen over a 900% increase in the amount of people purchasing physical gold. And a lot of people that we're speaking to are concerned that, I guess, the protests around the world that are taking place mainly in USA, UK, other regions around the world are, I guess, undermining the guidance that the government are providing insofar as coronavirus. And people believe this is going to give rise to a possible second wave of COVID cases. And then people are then repeating the same sort of buying antics that took place during the onset of lockdown during March, April, and May.
Well, yes, there has been a lot of buying interest. And Shikhar, this one is to you. What is your sense? Would you advise buying gold right now at these levels where we've seen prices gain up by near 15 to 20% already, depending on what currency you're looking at? And what would you advise on the holding period? How much should one buy?
Well, the majority of our clients that purchase physical gold do so for long-term wealth preservation and protection. So holding physical gold has never really been a short-term opportunity to make money. And I think because of coronavirus, people have taken the opportunity to either protect themselves over the short term or to make some money or to grow their portfolio over the short term. And I think, no one expects coronavirus to just disappear within the next 18 months. And 18 months is, relatively speaking, a very short period of time compared to, the next 10, 15, 20 years down the road. But the effects of coronavirus and, what that's going to leave us with, high unemployment, distressed asset classes, contracting global economies around the world, people spending a lot less money. And some have said that we're going to see, the deepest recession that we've seen since the Great Depression. As a result of that, people are taking a far more measured and considered approach to purchasing physical gold. And I think your question to me is, would you recommend people buy at this level with prices where they are? And I think it's relative. The price right now might seem expensive compared to where it was, 6 months ago. But, if we fast forward the clock and we look at where we are in, let's say, 6 years' time, if we expect ourselves to be in a slightly worse position in terms of unemployment and GDP contraction, property crash, equity crash, then most would expect the price of gold would continue to increase. And for that reason, now would look like, a buying option.
Welcome back, and you're watching Commodity Champions, and gold has been by far the best outperformer across asset classes in 2020 till time, given the kind of scenario that we have right now. Chirag, this question is to you. What would you see as trends? What are people buying? How much are they buying? And do you see this as a forming pattern?
I think something that we've seen over the last couple of months is increase in digital gold. Probably increase in buying online, while the ticket size still remains small. There is obviously an interest in buying online. I think Akshaya Tritiya was kind of a revelation, where even though the sales were down by 90%, but majority of the sales that happened actually happened online. And I think this is now going to be a new trend which is going to take, because social distancing will be the norm of the next probably 9 to 12 months time. And mind you, a lot of jewelers have got smaller shops where social distancing is not possible. So probably, the ones which have got online presence, or ones which are able to get in augmented reality in, will do well. Also the fact that, probably digital gold is something which is a serious player going forward, with financialization of gold happening, and probably people wanting more and more products apart from traditional bars and coins. So my sense is, I think online and digital are the ones which are going to probably be the ones to look out for over the next 9 to 12 months period.
Shikhar, what would you say? Because, until now, what we've missed in the global markets is big ticket funds. Not too much of a buying has been coming in from them. Is the reason we haven't seen the gold prices be able to break above that $1,740, $1,750 per ounce kind of levels? Do you see that presence coming into the market? Because the feeling across is that the global equity markets are overstretched. And once the buyers, investors get that, is when you will see attention turning towards gold.
So you saw Fed giving a guidance till 2022, they are not going to increase rates. I guess that is a big positive for gold, which also means the uncertainty is the certainty, at least for next 18 months. Given that outlook and that Every QE we have seen rising debt, higher asset prices, and etc. I do feel that there is a good scope for gold to break that resistance level of 1735, 1745. And I won't be surprised if I see a $2,000 in USD terms on gold in next 6 to 9 months, given the current scenario and the trade war. Do remember there is an election which is coming in US. Do remember there is going to be an intensity on the trade side a bit more severe. Do remember that there is going to be a significant amount of flow of money which will chase the right assets which can give the right returns. So I expect gold to gain in that particular light. Coming to part two, as far as India is concerned, marriages are going to happen, so demand is going to be there. It is only postponed. So whether it happens 6 months down the line, it happens 12 months down the line, or 18 months down the line, and I won't be surprised. And I would be surprised that if there is any savings which is happening on account of not inviting too many people, does it find some amount of place in gold or in a house?
Oh, well, absolutely. Josh, what is your sense? Is it going to be digital gold that will make a foray into these markets, or is it going to be physical gold, which anyway Indians love to hold? What do you see going forward as a trend when it comes to buying gold? And the second question really is about on what fundamentals would you watch when it comes to gold? There are plenty out there, but what are you picking up?
I think, first of all, a digital evolution when it comes to purchasing gold is certainly increasing. A lot of our clients, especially, though, they enjoy the physical, tangible nature of actually receiving their physical gold, knowing that actually they can touch and they can liquidate their gold. And, our clients are essentially removing their wealth from the banking system, not having to rely on a counterparty. During these uncertain times, a big risk, an unforeseen risk sometimes, is counterparties collapsing, not being able to access money from banks, not being able to access, pension funds. And I think history has shown us that, having more control when it comes to actually holding and accessing and being able to dispose of your funds by having the physical, tangible asset class is sometimes more useful than having, a digital asset class represented by, a number of zeros and X's.
Josh, also, what would you say? What part of your portfolio really should be given to gold?
Historically, the general guidance was that 10 to 15% should be used as a means of wealth preservation and protection. I would say that as risk within the economy increases, that percentage tends to increase. Our clients aren't purchasing gold to make money. They're not looking necessarily just for growth. It's more about protection. It's more about wealth preservation and insurance policy during uncertain times. We have a lot of clients selling properties and putting close to 70 or 80% into physical gold as a short to medium term hold until they can find a property that they want to put their money into. Others are taking far more of a measured approach and putting a smaller percentage. But I would say that during these uncertain times, it makes more sense to remove exposure to some of the volatile equities within the market. It doesn't make a huge amount of sense to keep your money sitting in cash, given the uncertainty of some of the banks and the low level interest that they pay, especially with inflation prospects being a concern. Some of our clients feel comfortable putting anywhere in between 15 to 25% of their overall net worth into physical gold. But I would say looking at it as more of a long-term hold as opposed to a short-term opportunity to make some money.
So clearly the advice from the experts is that you should invest in gold and increase your holdings, because this is a very uncertain time, and this perhaps is the time to start investing in the precious metal. Ishu Datwani, thank you for joining us as well. You are the first link on the ground. The jewelry sales, how have they been after the lockdown has opened?
So, right now our numbers are about 20-odd%. But the good news is that on day one when we opened, today is our third day, the day one that we opened, within the first hour, we sold 2 pieces of jewelry over the phone. Somebody wanted stuff, we sent them the pictures, and we made a sale within the first hour. And the second day, we actually had a client walking into the store and buying a set, and both these were diamond items. Of course, there are more inquiries now over the phone, and with FaceTiming people, sending images and sending videos, the momentum has not started in terms of physical, people coming into the store. We've had only 1 or 2 clients walking in, but yes, the inquiry over the phone and on social media has gained momentum. And going forward, I think gold and jewelry is one thing that Indians cannot resist, especially gold now that the prices have gone up. People do want to buy more. There are weddings that are coming up, and the fact that the weddings may be smaller with the social distancing and the number being capped, there's a possibility that those people would then want to spend the money that they're saving on the wedding in gold, because that seems to be like a good, lucrative, saving as well as investment.
Yes, absolutely. Well, clearly, there are people buying gold, inquiring even as the prices are rising. There is buying, and that is always said about India, by the way, that as the prices are rising, you see the buyers increase, because the expectation that the gold prices will rise further from here is something that lures us all into that one. Gentlemen, really appreciate all of you joining us, and that is the view really coming in from our expert panel, that gold gains are here to stay. It is a good time to start investing here, and the kind of uncertainty that we are looking at perhaps could last another 10, 12 or 18 months, and that is the time gold is one thing that would continue to give you the kind of returns it has given you in 2020 already. With that, it's a wrap up on this edition of Commodity Champions. Thank you for watching.